Attention fix and flip investors. Do you want to learn how to rent out your personal residence to your business? Well, stick around because that's exactly what we're going to discuss today. Hello everyone. For those of you who are new to me, my name is Lisa Marie McAllister of Pinnacle Financial Services, and I help real estate investors who fix and flip residential properties to save on average $30,000 per year through strategic business and tax planning. Now, for those of you who may be curious, I am both a CPA and an enrolled agent. But before we get started with today's discussion, I ask that you comment, like, and share this video. I also ask that you don't forget to click on that subscribe button, and that way you'll be notified each time that I upload a new video. Now, let's get started on today's discussion. Now, I wanted to briefly discuss how to rent out your personal residence to your business. Now, it can be found under the section code 280A, also known as the Augusta loophole. And it was originally created to protect the residents of Augusta, Georgia, who would rent out their personal residence to the attendees of the annual Masters Golf Tournament. Now, this provision is allowed for all individuals to rent out their personal residence as long as it's 14 days or less during a calendar year. Now, this also can be used by individual homeowners who also have a business. You are allowed to legally rent out your personal residence to your business as long as it's 14 days or less during a calendar year, and you're not required to report the rental revenue on your individual tax return. But what makes this even sweeter, business owners, is you are able to deduct the business rental expense on the business side of your tax return. Now, please note, just as you're not required to report the rental revenue on your individual tax return, you are not allowed to deduct the personal expenses of your residence on your individual tax return since you don't have an offsetting income that's being reported. Now, in order to qualify for this tax strategy, guys, it must be for a legitimate business purpose. And those legitimate purposes would be such things as a shareholders meeting or monthly staffing meeting, things of that nature. Now, when you implement this, there are a few key things that I would like to note, and that is being audit ready. Because I was a former auditor, my auditor cap is always on, so at least for my clients, I always implement this and make sure that they're audit ready in the event of an audit. Because you must be careful in using this strategy. It's relatively simple, but you can kind of goof up if you don't know what you're doing. And so I'll go over some of those things that you should implement should you decide to implement this tax strategy. And one of those things are, make sure you do not charge an ridiculously high amount for the rental. This will definitely put a bullseye on your back for an audit if it's ridiculously high of what you're charging, since you're not reporting this income. Make sure that it's the fair market value. So go out there and do your shopping to see what is the fair market value for that a venue would charge for this type of meeting, and that's what you should use for your basis. Another thing you should do is make sure that you invoice your business, that you invoice your business for the cost of the rental. And then vice versa, make sure you cover it the other way. Make sure that the business writes a check for that rental expense. Because like I said, this is deductible on the business side of the tax return. Another thing that you should do is make sure that you take the minutes of your meeting. This further legitimizes that there was a legitimate business purpose, that it really existed. You've got meeting notes. So these are some of the things that you should do. Oh, there's also one other thing. Make sure that when you have this meeting, I would limit it, at least I think it would be in your best interest to limit it to just your staff that you're having these meetings with, or with your current clients. I think that's very important. You don't want to just say it was for any old Joe Blow out there. Okay? And so, like I said, this is relatively easy to implement. There are only very few qualifications for it. One, like I said, it has to be your personal residence for at least 14 days out of the calendar year. You don't exceed, it's 15 days, so it's 14 days or less during the calendar year that you do rent your personal residence to, that you rent your personal residence out, whether it's to another individual or to your business. And lastly, you want to make sure that the property is not your primary place of business. So there you go, guys. It's very easy to implement. And I just want you to imagine the savings of doing this. Like when you rent out a venue, think about it. You're paying for the cost of food. You're paying for the cost of the space, tables, chairs, drinks, etc. If you're renting this out from your personal residence, just think you probably have most, if not all, of these items in your home. So you're going to substantially save on the rental expense. Yet you're able to pocket this cash in your pocket and not pay any tax on it. You don't even have to report it. But like I said, make sure that you follow what I've discussed to make sure that you're covered in the event that you're audited. And there's no problem with that. As long as you are doing it the right way, if you get audited, no big deal. You'll be covered. You'll have all of the paper trail in order to win the audit. So I'll end with that. I hope you enjoyed this video. I hope you found value in it. And as I always say, if you don't have a tax strategist and you would like me to be your tax strategist, don't hesitate to click on the link below and I'll be happy to assist you. Also, don't forget to click on the comment, like, and share button. That way others will maybe benefit from hearing this information, because for some reason this tax strategy is not very widely used. I don't know whether it's because of lack of knowledge that exists, or being afraid to implement it because maybe they're afraid of an audit. But like I said, if you have a tax strategist that knows what they're doing, you don't have to worry about an audit. As long as you're audit ready, you'll be prepared, you'll win it. And so with my clients, that's what I say, we're covered. We're not going to do any underhanded things, and we're going to make sure that when we do implement things that we do it right and it's covered. And so I will end with that. My link is below, and until next time, I will see you later. Goodbye.